In early 2024, YieldMax launched ULTY, the YieldMax Ultra Option Income Strategy ETF, and it has set out to deliver high income through covered call strategies as well as synthetic exposures on a diversified basket of US listed securities. Particularly chart, it has not been doing well since inception, so recently they later upgraded this ETF in 2025 with tactical enhancements. These changes have led to stronger performance as well as more stable income and improved risk control. So in this video, we're going to go over the breakdown of what exactly has changed and why it has been so popular as of lately. So a lot of newer investors are invested in this, so we had to go over what exactly is ULTY or ULTY. As per YieldMax's fund filings, ULTY is an actively managed ETF that writes covered calls on various US listed securities, and it may also invest in supporting short-term US treasuries as collateral. And the goal is to deliver steady weekly income with exposure to underlying equities. So the first change that they have done was actually the monthly to weekly distribution change. So previously, before March, we had monthly distributions. As we can see in the dividend history, it has been paying out every single month. It did have some pretty high dividends, but as we saw with the share price, it just kept going down, and the dividend amount kept dropping as well. But with this change back in March 13th, we can see that the dividends have been pretty stable. It has ranged between 8 cents and 10 cents per share every single week, and it's been pretty consistent, which is something that a lot of people have been liking as of lately. Now, this is a huge upgrade because a lot of people love those weekly paying ETFs. They love having the cash earlier rather than later, and while this does not directly influence how the fund has been performing, it does make it more popular because people love weekly paying ETFs. And although it doesn't change the overall dividend yield, which currently is about 73% forward looking, it does make it more attractive for income seekers looking for that regular cash flow. Now, the second change that ULTY has done was actually lower the expense ratio by a little bit through a waiver. So as we see here, ULTY has a gross expense ratio of 1.40%, which is very, very high. And it has a net expense ratio after the fee waiver of only 1.30%. And the advisor has agreed to a fee waiver of this 0.1% through at least February 28, 2026, so at least another half of a year. Even though 1.30% is extremely high, with the fund's performance and its consistency, it's totally worth it for a lot of people, and a lot of people are making a ton of money by pouring money into this fund to get that weekly income. And for people wondering, do you have to pay this waiver with your own money? And the answer is no. You actually just pay the expense ratio with the NAV. So the NAV is going to drop in price to account for the expense ratio. And that's something that confuses a lot of people. They're wondering about this expense ratio. Do they have to pay it at the end of the year? Do they have to pay it before they buy it? It automatically gets taken out of the share price, aka the NAV. And this expense ratio is so high because it's actively managed. It's employing a ton of option strategies that a lot of regular investors simply do not either have the time for or the knowledge to do themselves. So for a lot of people, this expense ratio is totally worth it. Now, the third change is going to be the holdings. Now, this is a pretty big change. So prior towards the change from 2025, they weren't actually holding any of these shares of these stocks of these companies. They were using synthetic structures with synthetic covered calls as well as swaps to mimic equity exposure. So now this new update, it holds actual underlying shares of the companies inside of this fund, as well as some synthetic exposure, but it's mostly holding shares. So they're going to be having a lot more stability as well as capital appreciation if some of these stocks do well. And if you take a look at their prospectus, which is available on the YieldMax website, they're actually going to be employing credit call spreads instead of standalone calls against specific securities. And the benefit for this is it maintains premium income via a spread strategy, as well as offering upside participation if the underlying stock rallies short term. And it also still generates that same consistent income while capping risk of sharp upside reversals. So in short, this means that we're getting some capital appreciation from these underlying shares with those credit call spreads, as well as more income with this spread strategy. And for those people who are not aware of what a call spread is, it's when you have a 2-option strategy where you're selling a call and buying a call at the same time and receiving a credit for opening this trade. And just to show a visual example, you would sell a call option at a lower strike and then buying a higher strike call. As we can see in Robinhood, it's going to be a call credit spread, and you're receiving a credit for opening this trade. But you don't have to worry about that too much. That's why we buy these high income option income ETFs. We don't want to be doing the options ourselves. Let's leave it to the experts to generate this income for us. Now, the last change is actually going to be one that is very underrated, and that's going to be protective puts that this ETF holds in order to protect this fund from downside protection. So as we can see in the holdings, we have a ton of these out of the money put options, which is going to be acting as insurance. So if any one of these holdings that it has suddenly drops in price a ton, these put options are going to increase in price, which is going to help with that downside protection. And a good example of this is this HIMS put option right here for the $48 strike. And this is one of the holdings of ULTY. And as we can see, as of recently, it had some bad news and it dropped from about $64, $65 per share all the way down to $43 per share. So this would have been a huge hit to the ETF because it had shares of this stock. But because we had this protective put, it helped mitigate the risk and it didn't really affect the share price at all, as we can see in the past 5 days. And with these new strategies, it really has helped with the stability of the share price and the NAV, and this is why it's been one of the most popular ETFs as of lately. And these upgrades have produced smoother NAV drawdown, there's less impact during these market dips, as well as better upside capture. As we can see, it's recovered pretty nicely since Liberation Day, and it's going on a slight upward trend, which is very good, in addition to that weekly consistent income, which is more appealing for retirees as well as income investors. And a lot of people are actually able to throw enough money into this fund to replace their 9-to-5 jobs, which is amazing. And if you guys are interested, let me know how much. And if you guys are interested, let me know if you want me to make a video on how much you need to retire on ULTY, or at least replace your 9-to-5 job, because it's going to be more than you need. You have to have more conservative estimates when using these option income strategies, because we need more conservative estimates due to volatility with the share price, as well as we don't know if it's going to be consistent for the foreseeing future. These funds are still new, so only time will tell if we can actually have the same consistency. Personally, I have 500 shares of ULTY, which is about 5% of the total portfolio, and so far I've made a ton of money on this ETF, currently up about 3% in the share price alone. I'm not too worried about that, but I received about $200 to $300 in weekly dividends overall, and I'm actually hoping that this ETF does drop a bit, because I would like to get some more shares and get the share count up to the thousands. But the bottom line is the 2025 updates have transformed ULTY into a more versatile, effective income ETF, holding real underlying shares, using credit spreads, and paying more frequently has made it more transparent, less volatility, and better at balancing income and growth. And although it remains an options-driven active strategy fund, ULTY is now better suited for investors chasing market-aware income with efficient risk management.